The recovery in the housing market has spilled over into the IPO market, with many companies seeing this as an ideal time to go public. Since 2012, 33 different real estate-related companies have entered the public markets.
Traditional real estate, what we're seeing, things like the builders and maybe the mortgage companies that are, we've got REITs, we've got other things coming out. Real estate, it's a whole ecosystem that's playing into the IPO markets right now. We've got everything from real estate brokers to companies that actually supply the real estate market, the construction industry. I mean, the whole chain is really jumping on the bandwagon as it relates to the capital markets.
Some investors, though, are worried that these positive trends won't last. The memories of the last bubble bursting are too fresh.
I think right now it is sustainable. I think a lot of the companies that we're seeing go to the market are they're mature companies that maybe took a step back during the recession. Obviously, investors need to evaluate this, but I mean, a number of the companies, they're good companies. Some of these are even emerging companies that have really built robust businesses over the last several years. While we haven't seen a lot of growth in the new housing market. I mean, there's been so much investment in existing homes today with remodels and other things like that. So the market has been sort of rebuilding itself, reshaping itself, and now we're seeing sort of traditional real estate come back.
And many investors, when they think of investing in a new company that benefits from real estate, they mostly think of home builders like Taylor Morrison or William Lyons, two newly public companies. But there are many more options.
At Ernst & Young, when we look at real estate, it's not just the traditional, realtors, the brokers, the, things like that. It's companies that have massive amounts of real estate to support their businesses. So it's hotel chains, right? It's restaurants, chain restaurants that have a 500 restaurant footprint. I mean, that is their business. Besides their people, it's real estate. And so you'll see it. Over the last 12 months, we've seen a significant number of those companies go to the market and actually perform exceedingly well.
5 restaurants and 1 hotel chain went public in 2012, and year-to-date all have delivered double-digit performance to their investors. The largest, Bloomin' Brands, is up 59%, and even the smallest, Caesars, with its enormous debt, has turned in a 77% return year-to-date.
And also companies, if they do want to grow and expand, and they are in this, in the real estate industry in some facet, investments need to be made, and they do need the cash in order to expand.
And I'm Deborah Borchardt, giving you the latest on the IPO markets for The Street.